Hey folks, welcome back to the asymmetric trading system update. Today is Sunday evening, October the 24th. And in spite of the fact that October is almost said and done, this is September's update for results on the asymmetric trading system. As those of you that are in the system know, I had a laptop go down at the end of September, and the spreadsheet that I used to show you here, the update for our results, was on that laptop. And I have had it back for the last couple of weeks, but I've just been lazy. So here it is, our update for the program all the way from January of this year through September. And just a couple of notes that I will make here again. Number one, I cannot express how pleased and happy I am with the results. I have pretty high standards. Most of the things that I try and attempt in my life, I never quite hit the level of goal that I had originally set. Which is fine. That's how you stretch yourself, you know. You shoot for the moon and you hit the stars, I guess. But this has just been absolutely phenomenal. Again, a dual-fold mandate that we set in January, back in January of this year to attempt to beat the market returns with B, lower risk. And that is the component that, while it's measurable, we measure the risk that we take in the asymmetric trading system versus the risk that the market has via standard deviation, which is just the amount of volatility, the amount of flux up and down, if you will, that you get in your account. So while it is measurable, it's the second and dual-fold mandate part of this program that I think a lot of people maybe don't see the true value in. It's wonderful, and it's absolutely awesome, and it's such a pleasure to say that we are beating the market results quite handily, I might add, and that we have done it once again for this month. But I think that the risk management part is really the part that I am the most proud of. And so again, let's just get into the numbers for the month. Take a look at where we are in the program, and you can kind of see how things panned out for us here as we look at the results. So for the month of September, I had a $2,560 gain on the month on my portfolio on a starting capital base of $41,713. That equated to about a 6.13% gain in the month. Now, I will say this for the month of September. We have been saying this in the program since January of this year, that we were just jonesing for A, some volatility in the marketplace, and B, some downward movement. The market has not been very volatile. It's been pretty consistent over the year. And it's been pretty much one-directional or one-dimensional in its directional move, and that is up. And so we got our wish in September. We got some pretty big movement days in the overall market, and we got some pretty big down moves as well. And one of the advantages that the asymmetric trading system has over just a buy and hold approach to maybe just investing in the S&P 500, the index that we're, I guess, essentially competing with here, is that we have the ability to go short. And so when markets go down, it's actually quite advantageous for us. We would actually prefer in the system that the market would go down every single month. That would obviously make it a lot easier to beat the overall market results. But we got our wish in September. We got a lot of volatility, and we got some pretty big downward movements. That resulted in a pretty massive gain for us on the month. 6.13% was my gain on the month. We, once again, were able to achieve positive alpha. Now, again, alpha is this construct or idea that you can take a comparable investment. In this case, we use the S&P 500, and you can both achieve better results or better returns than that with B, doing it at less risk. And that's the genie in the bottle. That's the panacea that everybody is looking for. We understand the concept of more risk and more potential return, but this idea of more return and less risk, it's quite the challenge. I will say that it is quite the challenge. But we were able to once again achieve positive alpha. I had a 6.13% return for the month versus a 4.76% loss for the S&P 500. We did have 16 profitable days and 6 losing days in the market. That compares to the S&P 500, which had 14 losing days rather than our 6 losing days. That was a big part of, obviously, A, us beating the market results, and B, doing it at a lot less risk. We were able to take 83% less risk or volatility than the S&P 500. I don't know for sure. I'd have to go back and look through the numbers for the year, but I do believe that that is the best we've done. Even when we have just barely even matched the market, or in a couple of months, you'll see here as we look at the summary for the year's results, not even beat the market for that month. We've almost always been able to do it with less risk, but sometimes it was 20%, 30%, 40% less risk. I do believe this is probably the best month that we have had in terms of managing risk in the portfolio. And of course, it was the worst month for the market this year. So it is interesting how those inverse relationships come into play. So you can kind of see how our numbers played out here over the month. I started the month September 1st with 41.73. We had a little bit of a losing day there, and then we went on a big winning streak. 1, 2, 3, 4, 5 days right there in a row of wins. We had a little bit of and again, one of the things that I stress to all of our members of the asymmetric trading system is don't focus too much on this. In fact, I would say really focus on the program and the results of the program quarter by quarter. So really, we should only be checking in on these results once, 4 times a year, right? Once every quarter. But I need to substantiate our results, document our results on a month-to-month basis. And part of those month-to-month numbers are the day-to-day numbers. But I always stress, don't get caught up too much into the little teeny tiny day-to-day machinations here. I think that what is more important as we look at the days and whether they're winners or losers is the difference, the differential there between these two numbers. And, you can see I started off the year with my asymmetric portfolio at about $25,000, and added, I think, about $3,000 to it at one point. So, the numbers were a little bit smaller, obviously, at that point, the differential between a good and a bad day, because I had a smaller amount of money. The money is starting to grow now in this account. But nevertheless, you'll see as the month develops here that we don't really have very many days where you're just kind of like, whether it was a win or a loss, where you're kind of like, oh my gosh, that is a really big swing in my portfolio value. But we had September 13th there. We had a little bit of a downward move there, and then some wins as we go forward there. And I'll need to pull back here in the spreadsheet to be able to show this whole thing. There we go. We come down to the 14th, and we get another 3 wins in a row. A little bit of a give back there on the 17th, a couple more nice wins. Give back a little bit on the 21st. Win, September 23rd, 22nd, 23rd, and 24th. And then on the 28th, give a little bit back, and then we have 2 winning days to end out the month. So if you look at our overall results here, let me actually skip right here just a moment. Okay, here we go. So again, a $2,560 gain on the month, 6.13%. We absolutely trounced the marketplace, 83% list rate. That's the real key component of this, I do believe. And where does this put us for the overall picture here on the month? Let's see if I can get this to fast forward here. Here we go. So here we are with all of our results from January 1st until the present. You can see each month, January, February, March, April, May, June, July, August, September. We're winding down the year here quite quickly. And there's a couple of things that I will note here on this result. So we are now at a 38.88% total gain versus the market 15.16% total gain. I don't know what to say, guys. We are absolutely just trouncing the marketplace. We are absolutely just killing the market. But there's a couple of things of note on here that I would say. Number one, again, is that while that's nice and that's all well and good, remember in January of this year, we sort of laid out the dual-fold mandate of this program, which was A, to beat the market, and B, to do it at less risk, and that the less risk component was as important, if not more important, than the actual total return. Meaning, let's say that we get to we start January, we get to the end of the year, December 31st, and the market has lost, the market crashes, the market loses 20%, and our portfolio only loses 5%. We would call that a victory if we could have accomplished that with less risk. So again, our goal is just to beat the market, but we are obviously just trouncing the market right here. Now, one thing that I will say, all I have done here, our number is better than this. Let me put it this way. Our number right now is way better than this 38.88%. But I don't have a accurate way of I guess I could get in and do the math, and here's where I'm going with that. So at the first part of the year in here, I think maybe March or so, I started with about $25,000, and I added $3,000 of more capital to the account. So I've allocated for that. I've taken, I'm not adding that $3,000 into our gains here in our monthly results. I've subtracted that out for that month that it was added. But that gives me a little bit higher capital base. And then number two, I'm not compounding any of these numbers. Obviously, I haven't taken any money out of this account since January of this year. These results are compounding. So this is just a simple interest calculation. This is not a compound interest calculation. And the site that I go to pull the data for S&P 500 results, investing.com, that is obviously showing the compounded results of the market over the year. But nevertheless, regardless of how you want to do your accounting, we're absolutely trouncing the market here. It has been just an absolute just gold mine for us. And so for those of you, if you're watching this and happen to not be in the asymmetric trading system, we would love to have you come check out the program and watch for 2 weeks. We've got a 2-week free trial that you can come in, watch the trades that we set up. They're very, very simple. They're very straightforward. It usually takes no more than about 3 minutes every morning. Just as the market opens up, we put our new trades on, and they pretty much manage themselves. It's the rare occasion that we need to ever get in during the trading day and make any alterations or adjustments. Those trades generally just kind of manage themselves. And it's been a wonderful, wonderful experience for us. So there's our update for September, guys. We will obviously be back in just a very short period of time to give you an update on our October results. But I can tell you very, very quickly right now, as we peer into October, this is obviously October 24th here when I am looking at this result. My account right now, my asymmetric trading account, is $45,820. So we are looking at just another absolutely gangbuster month here going into the month of October. But we've had a great month and a great year so far. So checking back in with you guys shortly. It'll be a couple weeks, and we will give you the October update. Thanks so much, guys, and we'll talk to you soon.